Hey folks, welcome to a product review at Finominal. Today we're going to have a look at Calamos' $15 billion market neutral income fund, which trades under the ticker CMNIX. Now, the fund's name contains market neutral and income. So we'll expect that this is a fund that generates income, so could be perhaps a bond proxy, and that's also market neutral. So let's investigate in terms of what's driving this fund and what makes it so successful, because $15 billion of assets is a success. Now, if you look at the benchmark as the prospectus, I think it's a Bloomberg Government Credit Index, and we only have one here that is on the short-term side. But what's more interesting that if we use our fund analyzer tool, it actually suggests the S&P Target Risk Growth Index as the appropriate index, not a bond index. And the S&P Target Risk Conservative Index effectively is a combination of equities and bonds. It's roughly 30% equities, 100% bonds. So it's kind of interesting to think about. So let's have a look at the performance. So we see the performance of the Calamos product since 2008. You can see it's a pretty consistent upward move. You can also see that the performance of that Bloomberg Government Credit Index has been much more muted, also less volatile. Perhaps that is the wrong index and we should have taken one with a longer maturity. But what's more interesting from our perspective is that there seems to be a relationship between CMNIX and that S&P Target Risk Conservative Index. And of course, the S&P index was more volatile, but you do see very similar drawdowns in crisis periods. That seems to indicate that this fund has equity exposure. And we can confirm that or evaluate that with a returns-based factor exposure analysis. So going to use the S&P 500 effectively for the equities exposure. And if we run a returns-based analysis, we can see that the exposure to the S&P 500 was consistently positive, which is not that great. So we do see that the exposure to this bond index was, well, almost zero on average. So you could argue that this fund was market neutral compared to fixed income, but certainly not to equities. And you can see this even more clearly that if you look at the risk sources for the last, well, almost 20 years, it's primarily equity risk we're getting. And from that perspective, the name is, well, grossly misleading. Now, that's with regards to this product on a standalone basis. Let's have a look in terms of how this kind of compares to other market neutral income products. And it is worth mentioning that two of those have a very short track record. So we should only look at performance data with a grain of salt because it's less than 1 year. What we do see is that two of those products, the one from Plan Rock and the one from Victory, did behave significantly different over the time period versus the product from Miller. Well, seem to have more similar levels of volatility and trajectory. Having said that, we would not read too much into that. It's a short track record, right? It's less than 1 year for some of those peers. But what is more relevant is in terms of the exposure to other asset classes. And so what we do see over here is the correlations to stocks and to bonds. Now, what we see is that there's actually only one product which sits in the middle, i.e. has no correlation to stocks or bonds, which is the product from Miller. And that's, of course, from our perspective, what constitutes a market neutral fund. It's market neutral compared to equities as well as to fixed income. On the other hand, we do see that those two products from BlackRock and Victory, right, that they have a negative correlation to equities, which is also kind of like interesting to think and needs more analysis. But the problem is more that the product from Calamos has a very high positive correlation to stocks, which is what we've seen earlier, that effectively almost all of the returns can be explained by the stock market. And that's not great. And then kind of like the final question that we asked ourselves, given this, can we replicate this product? And the short answer is yes. So what I've created is a simple portfolio comprised of the S&P 500 SPY, which has a 30% allocation, and basically T-bills, which has a 70% allocation. And so let's take this simple portfolio and compare it to CMNIX. Let me enter that here. And I think we do see a track record, right? We can, of the replication portfolio and CMNIX going back to, well, to 2007, right? And again, it's virtually the same, which simply means we can replicate this Calamos market neutral income fund fairly easily. What kind of like makes that worse for Calamos is that from a Sharpe perspective, the Sharpe ratio of Calamos over those 17 years was 0.67. The replication portfolio is higher from a Sharpe ratio perspective, 0.72. The current yield is a lot higher for the replication portfolio, and it's a lot cheaper with 13 basis points versus 0.77. So that kind of concludes our analysis of this product. So what we found out that effectively there's consistent exposure to equities, which means that almost all of the returns of the Calamos market neutral income fund can be attributed to the stock market and does not make it a market neutral product with regards to stocks, perhaps to bonds. But that is, as mentioned, misleading. We saw that some of the other products out there, i.e. the peers, offer lower correlation to stocks and bonds. And we also saw that you can fairly easily replicate this product, which is not that great. That's it in a nutshell. Hope that helps. Have a nice day.